Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope you're having a fantastic weekend. Two major things happened last week, the first of which was the 10-year and the 3-month yield spread inverted, and this essentially starts the countdown to a stock market capitulation and a recession. However, as we come into the last week of October, if we can get through October and start to come into November, the risk of a capitulation in Q4 starts to diminish as we get closer and closer to Christmas. So I have mentioned previously that I do think there is a capitulation coming down the tracks, but just bear in mind, if we get out of October and we start to trade into November, it will probably be pushed out into early next year as opposed to Q4 this year. And the second extremely important thing that happened on Friday was the Bank of Japan intervention in the yen. And to do this, of course, they sell dollars. Usually they sell US treasuries, which are denominated in dollars. And this time was very important because for the first time, it looked as though, based on a Wall Street Journal article, that the Federal Reserve have for the first time coordinated an effort with the Bank of Japan to intervene in the yen. So two extremely important events that took place last week that we have to pay attention to heading into next week and into next month. Okay, so if we have a quick look at the economic calendar heading into next week, there's a couple of very important events coming up. The first of which is an interest rate decision out of Canada, so the CAD pairs are unlikely to do anything until Wednesday and then start to move. I'm not looking at the CAD pairs personally next week because they don't score very well. They're currently neutral, but the CAD pairs may be something to get involved with after Wednesday and even possibly next week. Once this is out the way, we might see the CAD presenting good opportunities in the Forex market. The second is the interest rate decision out of the ECB on Thursday. This can have an impact on the dollar as well as the euro because of the relationship between the two currencies. And the other thing to pay attention to is the Bank of Japan interest rate decision on Friday. Now, they have already intervened, so it's difficult to see what they can do in this meeting, which is any different from what's already taken place. So there's a good chance this passes fairly uneventfully. However, two other very important pieces of data next week out of the US are the advanced GDP and also core PCE. Now, the dollar, when we go and look at the scorecards and when we look at the actual technicals of the dollar, has been very corrective, very choppy, and it may remain so until later on next week, perhaps on the interest rate decision out of the ECB, based on whatever is said. Or we could see a move start to take place on the advanced GDP, expected to come out positive after a couple of negative prints of GDP. And don't forget, GDP is a coincident piece of data. So if this comes out positive, you could very well see the dollar rally as the market discounts this. And also on Friday, another catalyst for a potential dollar rally if we get core PCE coming out slightly hotter than expected, as we've seen with recent inflation prints. So it's worth keeping these in mind because when we go through the charts and the scores, looking for a catalyst to kickstart the dollar is something you're going to have to be paying attention to next week. Okay, so let's look at the scorecards for the major Forex pairs heading into next week. And as you can see, the scorecards are screaming, reduce your risk. The market conditions are not as good as they could be. Therefore, you'd want to be reducing the amount of risk you're trading and waiting for better conditions. Think of it like this. The market essentially has two moods. And just as if it were a person, when it's in a good mood, it gives you money. And when it's in a bad mood, it takes your money. So if you knew somebody like that, you would want to be around that person when they're in a good mood. And when they're in a bad mood, you would want to avoid them. Now, it's exactly the same with the market. When the market is in this kind of mood, it's corrective, it's choppy, it's going to try and take your money as opposed to give you money. So it's very, very difficult to trade. So you reduce your risk. And what we're seeing here is the US dollar, which is the strongest currency in the scorecards, is coming off of overbought for the first time. This very often signals a near-term correction. At the same time, two of the weakest commodity currencies from last week have reverted. And a lot of this happened throughout the week, but also because of that BOJ intervention with the Federal Reserve coordination through the Wall Street Journal, it's basically thrown markets up in the air a little bit. And until you start to see the markets resolving or moving again, these conditions are likely to remain difficult to trade. So dollar coming off overbought for the first time signals that we're probably going to see markets choppy and corrective. Commodity currencies weak and getting stronger in the scorecards. The only thing we have here actually is the Japanese yen. This is the only macro signal saying that we should look for further declines or further advances in any of these currencies forwards looking, and that's the Japanese yen, which is weak and getting weaker. And even with that, you have the problem because you have the intervention. Now, normally intervention doesn't work, and that's because the BOJ hasn't coordinated it with the Fed like it did during the Asian crisis when the BOJ intervened. And so unless you start to get Federal Reserve coordination with the Bank of Japan, you're likely going to see the Japanese yen decline further. So we go into next week with the scorecards telling us, be careful, markets are likely to be very choppy next week. And at the same time, the one good trading signal we have from the scorecards, which is look for yen shorts, that comes at a time when the BOJ are not only intervening to strengthen the yen, but the Federal Reserve are now actually taking steps to coordinate with them. And that is when you do see intervention start to work. So how then do we trade these kind of scorecards where the markets are basically signaling a near-term correction or contraction? Well, we basically just have to look at the nominal scores here on a 1 month forward looking basis, because what this means is that we should be expecting the dollar to reach new highs, but there may be a short-term correction or a bit of sideways movement first. So based on this, although we don't have any outright buy-sell signals heading into next week like we usually do, and that's quite a rare event, I would be looking mainly at the nominal markets here, but being patient and understanding they might not go until the ECB on Thursday, until the GDP, or maybe even the core PCE reading on Friday. So I am interested still in US dollar yen to the upside. I am interested in Aussie dollar to the downside, New Zealand dollar to the downside. Also interested in Euro yen to the upside, Euro Aussie to the upside, Euro New Zealand to the upside, and also finally looking at Franc yen to the upside, Aussie Frank to the downside, New Zealand Franc to the downside. If you're concerned about the interventions from the BOJ, although as I said, they've already taken place, you don't have to get involved with the yen. And heading into next week, I do think, as I said, it is a week to make sure you're only taking the very best setups that you see, because it is going to be a week for patience and markets could be subdued heading into those big events towards the end of the week. Okay, so let's have a look at the individual currencies, starting with the DXY. And as you can see, the DXY certainly over the last 2 trading weeks, and we're looking on the daily chart here just to get a bigger picture view. Over the last 2 trading weeks, the dollar has gone nowhere. And even as far back as 4 weeks ago, we've pretty much moved nowhere. So if you struggled with your trading over the last couple of weeks, especially if you're trading Forex pairs, this is why. A lack of volatility brings a lack of opportunity. And the good news is usually explosive periods of volatility follow contractions, but right now we are in the midst of a correction in the DXY and a lack of volatility, and this is why exactly what the scorecards are projecting to continue, and why we should be reducing our risk when we are looking at trading especially the Forex pairs and the majors. So overall, we are coming off of overbought for the first time with the DXY, which is near-term corrective. However, I am looking for the 11490 to be achieved in the near future. The question is, do we consolidate into the data this week and then rally into the highs, or do we actually make a move into the highs and then perhaps sell off on the news next week? So these are the 2 scenarios I'm going to be looking for, but either way, coming into the November meeting from the Federal Reserve, it does now look like that is going to be peak hawkishness or peak rate rises from the Federal Reserve in November, and after that they're going to start to slow the pace. So I am overall dollar bullish, but I do question now, especially with such a big move in the dollar so far, whether we're going to start to see a near-term correction in the dollar. Certainly, if the core PCE inflation data next week doesn't tip markets over the edge, then of course this would clear the way for a near-term correction in the dollar and perhaps a bear market rally heading into November, December. So I think next week could be a pivotal week really for markets, and that core PCE data could dictate the next move for markets into Christmas. Next is the euro. Now, just as I believe the dollar is heading to new highs, I do think that the euro is heading to new lows. Whether we start to move straight away or whether we correct a bit first, this is what we're going to have to watch out for next week. But I am looking for 0.95740. And again, those pieces of data next week, the ECB on Thursday and core PCE data on Friday, they're likely to be pivotal, because if they fail to tip equity markets over the edge and we do not see panic selling coming into the markets from current levels, this is going to diminish the risk of a capitulation in Q4, because as I said, once we get out of October into the November and December months, the risk of a Q4 capitulation diminishes. So really those pieces of data next week are going to be very important and probably will point the way for the rest of the markets into Christmas, as I said. Next is the pound. As you can see, this is very, very corrective and very choppy. I do think this resolves itself to the downside, but again, near term, we might just come up, retest this and kind of hang around in this area before coming down. So I am overall technically bearish on the pound, but relative to some of the other currencies, it's kind of bullish to neutral. And as a result, I'm not actually looking at any pound opportunities this week. Next is the Swiss franc. Now, this is something to really pay attention to because the Swiss franc is one of the better longs in the scorecards next week. And if we look at this technically, yes, we are still really in a downtrend, but we're lacking momentum at the lows here. And at the same time, we've put in a big engulfing candle at the end of last week. And we've also failed to break below the previous low. So this is not technically bullish, but with everything we're looking at compared to a lot of the other markets, and coupled with a fairly decent relative score in the scorecards, I do think Swiss franc strength could be one of the few places we could look to profit from these markets next week. And Aussie Frank and New Zealand Franc, as a result, are highlighted in gold, as are the dollar pairs here. But just remember, although these are highlighted in gold, none of these are actually very strong conviction trades because the scorecards are pointing towards corrective markets as opposed to outright explosive moves. So really something to keep in mind, although these four gold markets here are, in my opinion, the better markets to trade next week. Next is the yen. We had the intervention at the end of last week. And again, the problem here is that it does look like the Fed are starting to coordinate somewhat with the Bank of Japan, although I wouldn't say it's extremely strong coordination because they're not pivoting or anything like this. They're really just kind of jawbone in and offering a little bit of rhetoric to try and talk the dollar down a little bit, as opposed to really any strong actions to reduce the value of the dollar. So overall, I am still bearish on the Japanese yen. Now the intervention has taken place, just like over here. I do think, and the scorecards suggest, we should be looking a little bit lower, and I would not be surprised, even if we come up a bit higher, to see this start to roll over and retest the lows. So again, outside of franc strength, keep an eye on further declines in the Japanese yen next week, especially now the intervention has already taken place. But if you don't want to get involved in the yen pairs because of the volatility, that's perfectly fine. Next is the CAD. Look at the CAD again and just look how corrective these markets have been. Very, very choppy. Opportunities drying up as volatility dries up. Overall, this is bearish. Can it come up a little bit higher and then roll over? Yes, it can. We also have the interest rate decision out of Canada, so I'd rather let that pass. If you get a weakening of the Canadian dollar based on that interest rate decision, then that might be a good opportunity to start to look for further declines into the lows and onto the 0.7088. For me, they're probably off the table completely next week. This is why I haven't put them in the list over here. However, at some point, I do think CAD short positions will once again be a good opportunity. And if you are looking to trade the CAD pairs, I would wait until the interest rate decision on Wednesday takes place. Next is the Aussie. Now the Aussie is gaining in the scorecards, and normally I wouldn't be interested in shorting a currency which is doing that. But because there is really no other signals around, I am looking further declines in the Aussie because technically speaking, we are testing the previous lows. And if we are going to get one more high in the dollar in the near future, even if it's not necessarily next week, we might just start to correct and turn next week. But, and that's why I say we probably need some patience next week. But I do think on balance, this starts to sell off and we start to decline towards the previous lows and also the 0.61240. So overall, although patience may be required in the short term, if the Aussie dollar corrects a little bit more, I do think the next move we should be paying attention to is for Aussie declines. Because if you buy the Aussie and it does start to turn on Monday, not only are you wrong, but you miss the move in the direction of the trend. And last but not least, then we have the New Zealand dollar. Again, this is corrective and perhaps we come up and retest previous highs over here. However, I am still overall only focused on further declines, even if I have to wait a few days or a week even to get this move, because in the short term it's corrective. So again, I don't want to be long the New Zealand dollar, because if it stalls out after a single day and reverses, not only am I on the wrong side, but I missed the move down. I'd rather be patient and wait for a near-term correction and then start to look for the market to roll over for shorts in New Zealand dollar. Okay, so let's have a look at the markets themselves, starting with crude oil. Now, crude oil is neutral in the commodity scorecards, and you can see it has been kind of choppy. On balance, I do think we come down to the 79.99. So if you wanted to trade this market, I don't think it's one of the best, although going into next week, a lot of the markets are kind of subpar. However, I would be short on balance. So any pullback in oil is still viewed on balance as an opportunity to look for further declines into the 79.99. Okay, so the first Forex pair we're looking at here is Aussie Dollar. Now on the intervention, we did have a spike higher, but Aussie Dollar is still really correcting, and you can see we are essentially having sold off here. We are in a new correction. So any continued pullback in Aussie Dollar is on balance viewed as an opportunity to look. And bear in mind, it may actually correct a little bit higher because the scorecards themselves are telling us that we should be looking for continued correction. Any continued pullback is viewed, though, next week as an opportunity to look for bearish reversals. I'm going to be looking down towards 0.6124. Next is New Zealand dollar. I do believe there's a very, very good chance we're coming down to the 0.5469 in this pair, and this would coincide with a rally to new highs in the dollar. The question is, for how long do we correct in the dollar before we make an attempt to rally into new highs? So in this market, I am looking for further declines, but because we're looking at a potential continued correction short term, I wouldn't be surprised to see it trade into this high over here and start to stall out. And this would be an opportunity to start to look for further declines into the 0.5469. But like with all of these markets, patience is likely required heading into next week. Next is euro dollar. Now I am looking for further declines in this market, but again, where do we correct to? Do we even correct all the way up into this area and we start to test this high? And this just becomes a big kind of A, B, C correction, and then we start to roll over? Potentially. So the best thing here to do is to be reactive. If the dollar, or rather if euro dollar starts to correct like this, I'm simply looking for a reversal to the downside, perhaps from the previous high, and that would be the opportunity and the sign that we are likely to see the next leg down. First of all to the previous low if you want to be conservative, and then on to the 0.9413. And the final dollar pair is US dollar yen. We came right to the target highlighted at the 151.64 last week before the intervention. That was right where the BOJ intervened, coordinating with the Fed. However, just like the last time and previous interventions, I am looking still for a continuation to the upside. So any kind of consolidation here, just like over here, I would be potentially looking for further advances, and I'm going to be looking back towards the 151.64. I do believe that US dollar yen is heading higher after this intervention, mainly because I do think we have one more high left in the dollar at the very least before any correction or any near-term reversal in the dollar. Next is Aussie Frank. I do believe we're coming down to the 0.6208. So like these other markets, the question is for how long do we correct until we start to roll over to the downside? So any continued pullback next week is still viewed only as an opportunity to look for bearish reversals. And I'm going to be looking down towards the next key of support, the 0.6208. Because of what we discussed with the Swiss franc in and of itself, coming off those lows with a daily engulfing candle, these two markets here are really something to keep an eye on next week in what could otherwise be quite a low volatility week in the Forex majors. Next is New Zealand Franc. Now, New Zealand Franc is essentially, after a really big sell-off, we just have a corrective wave here, and all we're looking at is a larger consolidation or correction. So I am ultimately looking for this to resolve itself to the downside, taking out the previous lows as the first target. Any reversal in this market or any continued pullback is simply viewed as an opportunity to look for bearish reversals, and I'm going to be looking down towards the previous low first and foremost, and then on to the 0.5424. Next is Franc Yen, and this is the final Franc pair, and as you can see, the blue highlighted markets are markets which have interest rate decisions next week. So we've got the BOJ with the Franc Yen and the US dollar pairs, and also we have the ECB on Thursday with Euro Aussie, Euro New Zealand, Euro Yen. So just bear that in mind, because if you get involved in a Euro pair and it goes nowhere into Thursday, you know why. It's because of the ECB meeting. It's waiting to move on that piece of data. So in terms of Franc Yen, I am looking potentially, as the yen short signal is the only signal actually we're getting this week, I am looking for potential further advances in this market. And if we start to stall out like this, I would be looking for further advances into the 151.83. Finally, here we have the euro pairs. I am looking for further corrections in these markets and any reversal, and perhaps it corrects into Thursday and then on ECB you get the rally. If that's the case, I would be looking for any break to the upside as an opportunity to start to look for longs into the 1.5839. Euro New Zealand, currently considering this as a correction, so any continued pullback in this market, I am looking for a reversal, and any bullish reversal, perhaps again on Thursday on the ECB meeting, that would be the opportunity to start to look for longs into the 1.7663. And finally, we have Euro Yen. Now, we traded right into both of these targets and we finished the week. That was exactly where the intervention was at the second target of the 147.97. Going into this week, I will say this is my least favorite currency pair. Why? Because we have both the ECB and the BOJ at the end of the week. So this market may just do nothing into the end of the week, and then it could get very volatile at the end of the week. But overall, I am looking for potentially further advances, and I'm just going to be looking back towards the previous level of the 147.97. Out of all of these, I do favour Aussie Dollar, New Zealand Dollar, Aussie Frank, New Zealand Franc, but I do think patience is required as they are currently in corrections. And just be aware that the euro pairs may not move until the ECB meeting on Thursday. Okay, so wrapping up with gold, silver and Bitcoin, starting with the gold-silver ratio. The gold-silver ratio is kind of going sideways, so I don't have any strong bias over gold or silver. Next is gold. Now, gold rallied on the BOJ intervention because we had that sell-off in the dollar. And because the scorecards are pointing towards near-term correction, I would not be surprised to see this kind of correcting next week. Maybe even retest in the 1676.86, which is the major breakout level we highlighted before. But I am looking whether we pull all the way back here or whether we just consolidate into this area and then roll over. I do think we are coming down to test the previous lows at least one final time as the DXY rallies into the previous highs. And so I am bearish on this, even though if it may require a little bit of patience, like I've said, with all of these markets. So any correction is viewed as an opportunity to look for shorts. This is the more conservative target down here, the previous low. And if we break this, going to be looking down towards the 1575.72. But if you want to be conservative, look for this previous low over here as a target. Next is silver. Again, we got the rally off of the BOJ intervention and the devaluation of the dollar near term. Any continued pullback is still viewed as an opportunity to look for shorts, although these are not, again, strong conviction setups. I am looking down towards the previous low down here, and then again, a second target down to this previous low. And the reason I'm looking at previous lows here is because of the risk of a correction in the DXY once we trade into the highs. But any of these lows down here, you could even coordinate this as you trade into the highs in the dollar index. You know, have a look where silver is trading into, and you could kind of mix and match both of those to say, okay, well, the dollar looks like it's going to start to reject from the highs, therefore I'm going to book my profits here or down here. But the next key of support, if we do come down here, is the 1696. And last but not least, we have Bitcoin. Again, another very corrective market, and I've just taken off the gold tab because it's not a fantastic market anymore, especially with everything else kind of correcting, consolidating, including equities really kind of lacking direction recently, as the dollar has also lacked direction. So any pullback in Bitcoin is still viewed as an opportunity overall to look for shorts. I've moved the target up here to the major previous low, the 17,567.45. There is a slight risk on the flip side of this. This could be a bigger A, and then you have your A, B, C correction, and then you come up. If markets do get choppy and you come up and retest this previous high, and then you've got a bigger A, B, C like this, and then you could find that Bitcoin starts to roll over and retest the major low. So I'm just kind of showing you a different scenario here, but overall, as it currently stands, I would be favoring shorts in Bitcoin. And of course, that's what risk management is for. If you get involved in a short in Bitcoin and you've got a stop loss and it comes and stops you out and then does this, then you take the small loss and then you start to get back involved once Bitcoin starts to reverse in this area instead. Make sense? So I am bearish on Bitcoin. If it does run up and I'm involved in a short in Bitcoin, it runs up to previous highs for a bigger ABC, I'll just take the small loss and I'll look to re-enter somewhere in this area, especially if we start to see the dollar turning and making a run to new highs as well. So that is it for me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. If you enjoyed today's video, why not consider joining us during the week, where I share my charts as well as the setups that I'm personally looking at trading with members on a daily basis. And we also publish the scorecards for over 75 markets in different asset classes, including Forex, stocks, bonds, and commodities. You can find out more about the benefits of GMT membership by clicking the links in the description below and also in the pinned comment below. So thanks for watching. The only thing left to say is take care and don't forget to trade safely.